Welcome back. Well, some new numbers out today show 260,000 people applied for jobless benefits last week. That is near the highest level since November of last year. But it's tomorrow's highly anticipated July jobs report that could be a major indicator of whether we are officially in a recession or not. Economic analysts expect the economy to add 258,000 jobs compared to 372,000 in June, which could cap off what's been pretty much a roller coaster of a few years for the labor market, starting with the pandemic. Over 21 million jobs lost in spring of 2020. And now 2 years later, you can see it has remained steady, hovering over the 350,000 mark. Tomorrow, though, could be a make or break day if data shows the post-pandemic hiring boom is finally slowing down amid rising inflation and recession fears. So, joining us to talk about tomorrow's jobs report, James Urio, trader, broker, and macro analyst, and Ahmed Riazgo, Chief Investment Officer for Insignio Financial Group. Thank you both so much for being here. And let's jump right in. You know, this kind of data seems to come out every single day, whether it's jobs reports or consumer data. Is tomorrow's jobs report really a make or break moment for us? And let's start with James.
There's no question about it. I mean, it comes out every day, but tomorrow's a big one. Remember, the discussion, the argument we've been having about what is technically a recession, what isn't, which started a couple of weeks ago. And when it first broke, I remember thinking to myself, who's stupid enough to be baited into this argument? And then I realized I was, because the classic definition we've learned is that 2 consecutive quarters of negative GDP growth, it constitutes recession. We had that. Then they're saying, well, you can't have a recession with the labor market so strong. Then 2 days ago, we get that JOLTS number, the job openings number comes out, and it has the biggest drop that we've had in a long, long time. And we've heard it from at least 12 major companies that have announced layoffs within the last couple of days alone. So tomorrow's number, not to be over dramatic or hyperbolic, it is a very big deal, particularly when you look at the light that it comes in days before this next CPI number on August 10th. So the combination of those two numbers is going to really kind of lay out the whole next quarter.
Really interesting. And could tomorrow's jobs report, though, actually lead to a noticeable change for the average American? And let's go over to you, Ahmed.
Yeah, look, we're expecting somewhere around consensus there. The bottom line with the question of whether we're in a recession or not, to me, he's right in that technically 2 negative quarters constitutes a recession. And that's only because you really have to go back to 1947 to have the last time that we've had 2 negative quarters without a recession. The problem with the numbers that have come out recently, especially last quarter's GDP, is that there's a very high chance that that number gets revised up into positive territory here. Remember, that was just the first estimate, and we had some accounting matters that went into it. But when you look at gross domestic income, okay, which really conceptually should trend with gross domestic product over the long term, that has actually been quite strong. Even that Q1 gross domestic income number was around 1.8%. So I do expect that Q2 number to be revised up, but you're right. Ultimately, the labor market, we need to see it some resiliency here, but it's a double-edged knife for the Fed here, because remember what the Fed is trying to do, it is trying to engineer a slowdown precisely because of the wage pressures and some of the inflationary pressures in other parts of the economy.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.